Hey everybody, it's Pete. Good morning. Welcome to Stock Trading Pro, where we have a stock market live every day where we discuss stock picks, the market, and everything related to making active trades. Well, if your head's spinning, the tech stocks that reported earnings last night have it spinning even more. We actually drew a picture last night that I want to show you. We spoke about the SPY ETF and the price action versus volume on the recent rally. We had a few people calling it a dead cat bounce. I don't know. It was very hard to fight. I can tell you that. I came into the week looking to be a short seller of stocks after the market rallying on Monday and Tuesday after we broke that box. The downtrend line got hit absolutely perfectly yesterday. We'll take a look at that chart as well. But obviously, the technology stocks earnings are what we're going to talk about today. It absolutely imploded the stock market and stock market futures yesterday afternoon. So now the question is, are any of these stocks, including PayPal, a bargain down in this area? We got some news on Cathie Wood dumping one stock, loading up on another stock that she bought. We'll take a look at that in a second as well. Bank of England, interest rates, unemployment, initial claims coming out today. What else can we throw on the fire right now? We got a lot of logs out there. I will say this, and it's something that I want to mention very specifically. In today's video, and in most of the videos that we do, we spend a lot of time about understanding when to trade more aggressively, when to buy stocks with conviction, and when to reduce your position size when you're buying stocks, if you should even be buying stocks at all. And I just want to let everybody know I've gotten some really amazing feedback that they know some friends that are absolutely getting their head beat in right now. And members of our community, which hopefully includes people here on YouTube, are more than holding their own. And that's really good long-term thinking. And in our community, I call that, we hashtag trading like a pro. And I just want everybody to know that if you're listening to the suggestions that we make, listening to the experience that we have in our stock trading, again, my 21 years, 22 years actually now, sometimes you step on the gas, sometimes you have another cup of coffee. These last 5 or 6 weeks have been super interesting. Should you be short selling heavy? Should you be buying stocks on the dip? Should you be buying some of these tech stocks that got hammered yesterday? We're going to discuss all of those things today. So stick around. Be back in just 1 second. Okay, so thank you so much, everybody, for joining me today. Obviously, everything we discuss here is for educational purposes. It's up to you to make that final decision. Hopefully, I'm providing enough experience for you to help you make better decisions. So we're actually going to jump right over to it. We're going to take a look at Facebook first. There's a bunch of other stocks. We also have one stock that is up big pre-market that's not getting a lot of love. It's not the most sexy stock in the world, but it's one you've probably seen commercials for pretty much every day. They're all over the place. So we're going to take a look at that stock as well. We're going to start out with the Facebook news. Obviously, the tech leader, Facebook Meta platform shares plunged 20%. It was ugly yesterday. It just got absolutely crushed. The big thing about Facebook Meta platforms, and look, we've actually discussed this quite a bit. There's two things. Number one is expectations. It's not the absolute number. We need to talk about that all the time. We get good questions about, I don't understand, they beat. Yeah, that's great that they beat, but what was expected? We're paying for tomorrow's revenue. We're not paying for yesterday's revenue. Okay, so that's a big thing. So even if you're a brand new stock trader, new to the stock market, and looking to understand when earnings get reported, how do you interpret them? We actually had a few more this morning, and one company that had a buyback, that the stock is actually trading lower after earnings, but buyback is usually good news for the stock. That's going to be one we're going to keep an eye on this morning. ConocoPhillips reported this morning. Merck reported this morning. Penn is the company that we talked about. I don't know if you consider them a tech stock. I guess you would. But we're going to continue on in some of the areas that we're taking a look at in the tech area. So Facebook plunged. Shares were absolutely demolished yesterday. So we're actually going to talk about this as well. I want to first go over to the SPY. And this is a big deal because we drew this yesterday. Let me actually put this on the screen again right here. We actually talked about this. Now, I can't say this strongly enough, and we say this every day. When you're looking to buy stocks, you're actively in the market, you need to understand that you need to look at price action and volume, and you need to know what should happen to have conviction in follow through. So what's kind of cool here is we actually took a look at this over here. And as the market rally, some people calling it Santa Claus rally, call it whatever the heck you want. All I know is that we kept rallying into new all-time highs on decreasing volume. Decreasing volume. That's not what's supposed to happen. Now, we actually imploded on heavy volume after new all-time highs, pushed down at a pause, pushed down. Now, this pause, quote unquote, technically should have pushed down, mostly because it was below all key moving averages, right here. But now here's the thing. But what's not supposed to happen during a pause? Now, we know push up and a pause, right? A push up on heavy volume, you pause on light volume, that implies continuation of stock prices. This particular move to the downside, we actually got crushed, paused on heavier volume, and then we saw this little rally back to the upside. Now, what's interesting is about the rally that we saw to the upside over the last 4 days is it kept going up on decreasing volume. And we've seen a couple of stocks do that. I'm going to take a look at NUE as an example as well. That's not what's supposed to happen. So if you are finding that your timing is off, if you're finding that when you buy stocks, you're not getting that big follow through, or maybe just don't have the conviction, please add that volume chart on the bottom and keep it as simple as possible. That what should I see in volume in order to have conviction if I'm going to buy this stock right now? So if we take that back over, there was so many different things that happened. We had heavier volume on the pause. We had a light volume rally, and we hit resistance yesterday. And then the tech stocks reported earnings yesterday afternoon and just imploded the stock market. Now, this is all coming after Google had good earnings, announced a 20-to-1 stock split, and PayPal got absolutely crushed with and getting beat up on television yesterday. We're going to take a look at all of those because we want to know now, is it an opportunity to pick up these stocks at a discount? That's the big question right now. Right now, if you're a regular viewer of the channel, you know I am not big on bottom fishing at all. What we're going to talk about now, and want to make sure we keep the context in the right order, is we're going to talk about what needs to happen in order for us to consider starting to buy some of these stocks that are getting crushed. Now, what we need to see, we need to pay attention to see, are the people with big money stepping in like they did in a very popular stock last week after, again, Cathie Wood, who's got a long track record of history. This is not about Cathie Wood. Cathie Wood started to dump the stock. Just yesterday, she got out of all of it, as far as I saw in the news, and now she's loading up on a different stock. But what we're looking for in Netflix and the price action we've seen the last couple of days, and whether or not it holds the bid, is what we're going to look for in all of these stocks. We have Facebook, Snap, Spotify, Twitter, Square, which is now Block, Pinterest, all of them getting crushed. But there's one that is a shining star right now that's actually hanging on. But let's first take a look at Netflix. And this is going to be the poster child, for lack of a better way of putting it, right? Netflix had earnings, got absolutely crushed. The news came out last week. Bill Ackman started to bid for the stock and actually started to rally. Now, what is the big thing that we need to see? So again, if you are a regular viewer of our channel, which I hope you are, and if you find some value in these, please do me a favor, smash that subscribe button so you get updates, and hit the like button so I know that you like this video. What we're looking for now, and again, this is what we talk about all the time. Anytime before I buy a stock, we need to remember we make money during the push, we manage during the pause, we manage risk during the pause. So right now, what we're seeing in Netflix, after it got smashed, we have bullish gap, and pause. We're now looking, with the market getting hit pretty hard today, pre-market, we're looking for Netflix to pause on lighter volume. So that's the first sign of the smart money doing what we call holding the bid. We got a lot of questions recently, which are really good. How do you differentiate between short covering rally versus new buying? So you have stocks that get hit down really hard, push down and a pause, push down and a pause, push down and a pause, big push down on earnings. And now we rally off of that. So you can see here, we got earnings, after earnings, we rally on heavier volume. And yesterday we paused below, let me actually make that a little bit bigger, below the average volume. So what are we looking for now? As Netflix punched higher, we're getting the first signs of proof. Again, use proof in the context of we're seeing follow through. So what I'm looking for now in Netflix, and remember, we've been doing a lot of this week with stocks that have had these massive gap up. People ask me, should I buy it after that big gap up? And the answer is, have that line in the sand. And we've been using ATVI as an example. We've been using Kohl's as an example, which, by the way, Kohl's today, KSS, has set up what we call a snapback trade, where we are looking for the buying pressure that has pulled back to reassert itself to the upside after a lower opening. That's how detailed you got to get. So what we're looking for now here is it's not a level that we're looking for in Netflix. Now we're looking for price action and volume. So after we pushed down, we rallied. Now we need to see a pause on decreasing volume before the next move. And that next move in that just after that light volume pause is where I consider looking to initiate my trade. Now, remember, we say this every day again, because I really want to drill this home. If you have a big bearish move to the downside and you see the first sign of reversing to the upside, if you choose to get started, that will be an aggressive trade because you don't have a lot of proof yet, proof in the form of price action and volume. If you decide first time it's reversing, it should be first shares. That's so critical. I can't get it across strongly enough. First shares means that you're putting the stock in your position summary, you're buying it, you're getting a little nibble, and you are now reading the tape as it moves up and down because you have that level, which is now your entry price. If we start to do that in some of these stocks that have just gotten hammered, I'm not going to say safe, the smarter way to work your way into those positions is now we need to see this price action happen over the next 5 to 10 days, with maybe a 4-day push to the upside. We see a little bit of a pause. That push up is heavier volume after you bottom out. Like, again, I'm leaving this up on the screen intentionally so you can visualize what I'm talking about in these stocks that are getting hit. So again, we got Facebook, Snap, Spotify, Neo's getting hit, Twitter, Square, which obviously blocked. And we're going to talk about that with Kathy Wood in a second. You need to know if this happens, then I plan to do this. And man, I really hope I got some really nice comments. People putting Post-it pads on their trading monitors. If this happens, then I plan to do this. And I love to see that because that is the thing you need to know before you buy a stock. What do I need to see and what do I definitely plan to do? Again, the reason that traders are struggling right now is because they're not seeing what they want to see, but they're trading anyway. And that's just bad trading. You want to up-level what you do and get to the point where if you don't see what you need to see, you have to be okay with being in cash. And I actually wrote a long letter to everybody in our community today, how proud I am of people in the boot camp, our order flow program as well, that they are fully understanding that when the conditions are challenging, and let's face it, the stock market is challenging right now. Look anywhere, it is all over the place where you go, new all-time highs, super bearish, rallying back up, and now we're getting crushed again. This is a moment to preserve precious capital, nibble on some of those ideas, trade for a little bit of cash flow, which we described what that means yesterday as well. And then when the market opens up a little bit and becomes a little more obvious for more than an hour, then we could dig in a little bit more deeply. The 1 or 2 sectors that have been really strong recently has been energy. Let me zoom this out a little bit. Energy, for obvious reasons, and this is going to get even more moved to the upside if we get something happen with Russia and the Ukraine, and financials, which have started to catch a little bit of a bid. You can see we're actually starting to look at some of the percentage moves. Now, you can see in the XLF, this was a big deal here. We held the 50-period moving average right over here and blasted above there, but it pulled back with the rest of the market. Now, the whole conversation about interest rates should affect financial stocks in a bullish way. Because look, let's face it, financial stocks make money. Their currency is the difference in those interest rates where they got some wiggle room that they can loan money out and capture the spread. That's essentially how they make their money. So higher interest rates is going to widen their margins a bit. So financial stocks should benefit from that. So we've been talking about them pretty much every day, and I'll go through the list of stocks that I've been looking to buy. We actually have a swing trade on in Wells Fargo right now. Citigroup is a stock that we've been watching. Morgan Stanley, we keep talking about this 106 level. That's imperative that you have the alert set for. Somebody was asking about Amazon before. Look, Amazon actually came out and got crushed with the rest of the market. We had somebody yesterday asking about buying Amazon because of this 2-day move. It's all the way down now at 290, 29.10, which is not really that far down. I mean, it's a 3% move, so not really horrible at that point. But if we just do some simple, which again, simple is what I like to keep things. Amazon right now needs to get above that 31.50 level again for me to start getting involved. Now, remember what we just said. I'm going to leave this up on the screen here again. There's trades And then there's good trades. Not every idea that you spot just because it had earnings or just because it had news makes it a good trade. Might make it something that you put into your game plan. You start to put it into your list every day that you're watching. But remember, the reason we choose to take risk, the reason we choose to accept risk is because there's a good chance of us earning at least the initial profit target that we put on the trade. So buying any of these stocks that are getting hammered on the way down, just not a great idea. Honestly, it's just not a great idea. It's not a good trade. Now, here's where we got to make the separation. If you buy a stock that's getting crushed and you happen to buy it and it turns around at that moment, that does not make it a good trade. It makes it a lucky trade. And would you rather be good or would you rather be lucky? You can repeat being good. Being lucky is very expensive, especially get one stock that does not reverse. And I'll show you probably the poster child for that right now, which is this one. This stock was on fire. We had some people that knew into the boot camp right in this area after this push down saying, I'm stuck. What do I do? Look, scale out or get out. If it's not doing exactly what you want it to do, you have to get your capital back, go put it someplace else where you can make money and get your head back and don't milk bad positions. Well, you get out of these trades, you're not riding it all the way down. We spotted last week that the stock is showing signs of accumulation, and I'll show you what that means over here. You can start to see that there's much heavier volume now in this pause, and it has actually rallied the last couple of days. So heavy volume, we're looking for a light volume pause, and that would actually end up having us, let me actually move this out because we actually broke that trend line. This is actually how you work the charts, by the way. Now we have a new box for this stock right there and here. So it needs to get above this level to validate a new move to the upside. So we just want to hop on over into some of the other tech stocks because we've been talking a lot about which ones are in play and which ones are not in play. Well, I'm going to actually go out to the weekly chart because we're hitting some levels that are pretty big. Right now, Facebook at 251. We are talking about this stock is all the way down here, right in that area here. Now, this is actually interesting, right? There was resistance, held support, and we actually stopped right at that level. Now, let's give a definition to support and resistance. Support and resistance is where buyers or sellers did something significant before. It does not mean it's definitely stopping there. You have to put the context of all price action in what's probably going to happen next, not what's definitely going to happen next. And that's a big problem that chart readers get into where they think chart reading is the answer to trading. It's not. Chart reading is what's probably going to happen and putting those pieces together. Trading is the actions you take to buy and sell stocks that will make you money. So we're obviously talking about Facebook, Meta platforms right now. I keep saying Facebook, Meta platforms. It stopped exactly at that level where buyers did something significant. So does that mean I'm going to jump in and start bidding for Facebook stock while it's down 22%, almost $72? No. It's interesting now that it stopped at that spot. So remember, we talk about there's two different places. There's the trading game plan and the tracking journal. So Facebook is going to be in a separate watch list for me right now to see if it holds this 250, 255 price. Then what do I want to see? What do I want to see? Then what does that mean I'll do? If we go well bid for more than 5 days, in other words, we go higher highs, higher lows, and that weekly chart, and I'll just show you what that looks like over here so you're super clear. We're looking for this. We're looking for this type of price action, higher highs, higher lows on the weekly chart in Facebook at this price level. If that happens, then I will start to consider looking for picking up some shares of Facebook. Now, remember what I just said. I didn't say I'm buying it because it's at that level. I said it's at that level and it's interesting, but we cannot ignore the giant hangover that it has this morning after disappointing earnings. That's interesting. Now, am I forecasting? No, I am looking for deep pockets to recognize that support and say, wow, last time the cash flows at this level were awesome and they pushed the stock up for the next 6 months, even more than that. Yeah, the next 6 months. So 2 quarters at this price level, it went up. Very similar to what we've been talking about in some other stocks that took a really big hit. Netflix being one of them. It took a $120 hit or something like that. That's a different cash flow and measuring that stock at right around, let's actually take a look at the exact number. I'm like talking like I don't have charts in front of me. Remember, what we're buying is the cash flow, and they didn't like it up here, but now when it went sub 400, that's a different cash flow you're buying. So remember, price earnings ratio, multiples, and all of those things. We're paying discounting this discounted cash flow method. We're discounting today's price for the future earnings. And there's a big difference in buying Netflix at 700. Yeah, 700 versus three, actually went all the way down to less than 350. So that's a huge haircut in that stock. And that, again, that's trading language haircut, how much it went down. So now we're looking at some of these other stocks. PayPal will probably be the biggest one, but let's actually talk about the Cathie Wood conversation for a second. Cathie Wood, yesterday came out, sells $21 million in PayPal amid the stock crash. Boy, it seems like her timing and some of the ideas she's dumping is she's getting out as it's going down. Loads up heavily on Block. So if we take a look at those two stocks right now, she's dumping PayPal or exiting PayPal after this monster move. Let's give a little more context on the daily chart. So obviously earnings here and still a little bit lower. Yesterday was nearly 25%. It actually been over 25%, and loading up on what is now known as Block. Oh, excuse me, SQ, not DQ, on Block. So what's kind of cool about this is we actually have the line in the sand where we're mapping out. So think about what we're talking about right now. We're not guessing. There's no guessing, no forecasting, no predicting. If this happens, then we plan to do this. That's trading at the highest levels. And am I drawing simple trend lines? Yeah, you bet your bottom dollar I am. I want my trading to be simple. I want to make definitive decisions. I do not need 55 indicators to tell me if a stock has stopped going down, volume has stepped up, smart money's doing it over 2 weeks, and the right price for me to validate that. Now, I know there's a lot of you out there that are getting those Cathie Wood emails every day. Remember, she's super smart. She's got a long track record, but she's not day trading. She's not looking for this stock to bottom out today and get out of it next Tuesday. This is a longer-term play with her. That's why a lot of her growth stuff, she's been buying it on the way down, looking to get amazing prices if they do. She just happens to right now be getting caught in a tech firestorm and the market rolling over at the same time as interest rates, which is actually going to be the next thing we're going to talk about right now, which is obviously initial claims coming out today, but more along that lines. Bank of England actually this morning raised interest rates for a second straight meeting. So they finally have the guts to do what our FOMC is not doing right now. They keep kicking the can down the road. You can see they raised it 2.5%. So basically did exactly what they said it was going to do. Very similar to what we're talking about here in the U.S. is stemming inflation, and depending on how much it goes. Now, if you didn't happen to catch the news, the inflation numbers were the highest they were in 40 years. And that's really why the market got a little bit of a shock last week after the FOMC. Everybody was fully expecting the FOMC to say, okay, we're going to start, which is why that big move happened from basically the all-time highs to a 5 or 6 week, 5 week, basically end of December into first week of January, where we got crushed, anticipating the Fed coming out and saying, we're going to start raising rates today. They didn't. They pushed it off to March, and that's how we got a rally in tech. That's how we got a rally in the overall market, which is not what's supposed to happen. When interest rates go up, tech stocks are not going to love that. And because the whole world right now is so short-term thinking, which is awesome and crazy at the same time that everybody's chasing this short-term alpha, we had that vicious move to the upside. Some people called it a dead cat bounce, whatever you want to call it. And now the conversation is coming out again. Now the tech stocks are reacting. What's going to be super interesting today, and we get this question a lot. Let's actually go over to the futures charts. What levels do I pay attention to today? So now the two big levels, I'm giving you them straight up, whether it's your individual stocks, any of these stocks that just had earnings this morning, tech stocks specifically, especially now because they're going to have heavy volume pre-market. I generally don't put too much emphasis on the pre-market levels unless there's a story, unless there's activity. Today, obviously there is. We want to know the pre-market levels both in the futures and your stock. So now you have two levels to read the tape. Remember, everything that we do, everything that we teach, everything I'm hoping that I'm showing you here, there's three things. There's order flow, stacking the order flow specifically. And right now, most of the order flow is to the downside other than financials and energy. Stacking the order flow, reading the tape, and reversing risk. Reversing risk also has a lot to do with where you're getting in compared to the optimal entry for that particular stock, and what is your correct position size at that moment, depending on how well you stack the order flow. So pre-market today, this is the big thing, all right? I'm actually going to go back over to the charts, and we're going to take a look at the futures. Excuse me. And we're going to bring it back on a 5-minute chart. Actually, it looks like it's bouncing a little bit already. So what I would have right now in a big way is I would need to know, where did the pre-market selling stop? And right now we're looking at around that 45.20 level, 45.20. So I'm going to leave that up on the screen right now. So the two levels that I'm going to be walking everybody through, that I'm going to be focused on pre-market today, is, do we get down to that 45.20 level in the futures, in the S&P futures? I'm looking at the March contract right now. That's the line in the sand that I say, if new sellers come in and punch it through that level, that's a big deal. We pushed down hard, kind of leveled out. We're probably waiting for the 8:30 numbers right now, the initial claims. Let me just put that up on the screen so everybody's fully ready for what's coming out. So low jobless claims reflect high demand for labor. So this is one of the big doozies that you got to be aware of, coming out at 8:30 Eastern time right here. That's one of the big economic numbers that you need to be aware of. So we have that coming out at 8:30, which is an hour before the market opens. We have this level right here, 45.20. So now we have two different levels. Okay, we have 45.20 in the S&P futures. We're going to have wherever these stocks open up at 9:30, and we're going to have the 8:30 numbers come out, which is going to throw everything even more in chaos, right? See if it's good, bad, and different. We'll let that dust settle at 8:30, right? Which is why we start our boot camp game plan meeting at 8:30, right? We give ourselves an hour to game plan together prior to the market opening, where I review everybody's ideas. So those are the levels. So you have 45.20 in the S&P futures right now, which is the March contract. We're going to have the opening price at 9:30. Those two levels, out of everything you could possibly be watching on Wall Street today, the opening price of your stock and that 45.20 level, those are the most significant levels. If they're stuck in between there, that's kind of the gray zone, and you don't really have an edge at that point. If they hold that bid at 45.20 and your stock opens here, trades above, and we stay above that, then we're cooking with a little bit more bullish gas, and that's going to change our opinion to start looking for maybe some bullish ideas that are already in the game plan heading into today, which I'm going to give you those ideas right now. Now, here's what I want to drill this home, because it's that important. What we just did is how you should be thinking every day. Now, today we happen to have a lot of activity pre-market because of earnings, stuff imploding, Bank of England, initial claims coming out, all of this stuff, right? This is the stuff that will separate you from everybody who says trading doesn't work. Trading works if you work it. You can't just wake up in the morning, log into whatever chat room you're in, and say, what are you guys looking at today? That's not going to cut it. That is not enough work. If you want that, that unlimited upside that they sell in the commercials, you need to understand that if you want to run a trading business, either full-time, but especially part-time. I know a lot of people here are working a full-time job, which probably that's how most people trade, right? If you're going to run a part-time trading business, you have to schedule it and run that business at the same time every day to do your scanning, your game planning, and scripting out what you think is going to happen. What we just did, all of that is just a tiny piece of what we do every day, but you need to start doing that if you want to have conviction. If you want to see, when you buy stocks, you expect them to move in your favor. If you're looking at the market and it doesn't look obvious, you know that that's the time to be in cash. That's when you start acting like a pro. Now, I'm getting loud. I do this all the time on our coaching calls. I start to get loud because I get excited about the topic. I want to challenge you. Ask yourself right now, how much time are you putting into your trading business? And are you scheduling it as much as possible? I know we're all busy. Are you scheduling it at the same time every day? We're like, every day it's 7 o'clock. That's what I do, 7 p.m. I schedule my time. Boom. I am watching all of my scans. I'm determining, should I be buying? I start with the market. Then I go to the sectors. Then I go to industry groups. And then I put stocks in my game plan. How much time are you putting into that right now to expect consistent profits? Ask yourself, how you spend your spare time will dictate how you spend your future. How are you spending your spare time right now? Are you watching reruns? Are you spending all those hours on Netflix, which I do on the weekends, but not during the week? Or are you watching these videos on repeat? Are you trying to get better? Are you learning from your mistakes and then taking the action in that game plan, scripting it out, what you expect to have happen today, what you expect to have happen this week? Very much like we just did with there's the level in the market, where's the opening price, and how do we plan to trade around that? What conditions would lead to awesome ideas versus no, it's still stuck in the middle of nowhere, and I'm not going to do anything because I'm not throwing my money away because there's no edge. Are you that prepared? Sounds like a lot, right? It's not a lot. You just need to know what you need to look for. When you know what you're looking for, you're not lost anymore. You know exactly what to look for. If it's there, you do something. If it's not there, you do nothing. That's trading at the highest levels. Let's get into some other ideas today. Take a look at some ideas for the long side. Just wanted to give you a few ideas that are on my radar today. Obviously, Exxon, which reported good earnings and now has paused. It's slowing down there. We're going to mostly be looking at energy type stocks today. Schlumberger, also a really good clean pause. If you haven't watched BROS, this actually has had some pretty good price action recently. Amgen as well. Oh, I almost forgot. we started to talk about the one stock that had great earnings yesterday. We didn't even bring it up, which was T-Mobile. T-Mobile actually, we're still in much longer term bearish order flow, but you can see over here it's up 7%. News was great. We're all the way up here at 118. So it looks like we got a clear. Let me just give you the definitive level here. It looks like that level right there around 121 would be the level. So if you've been watching the videos every day, this would be one of those trades that would be a two-step trade for me. I now have today's open, wherever it opens today. That's my line in the sand. So remember, every day I'm hopefully teaching you how to read the tape. There's the opening price. That's going to be the level. Above 122 would be where I'd be looking to add to that trade. So that's a two-step trade. All right. I want to work my way over into a couple of other ideas here today. Actually, you know what? On the short side, we actually had a couple of ideas. Let's look at Penn. Penn is the company that actually had, you'll see in the news, they actually reported, but they announced a stock buyback this morning, which is typically very good for a stock. So we're obviously in longer term bearish order flow right now. We started to break. Let me actually zoom that out a little bit. So when we draw the downtrend line, then we see the break. We are right there. And we are right there. So that's actually the box that Penn's in. And actually, with the earnings coming out today and the other news, we're still kind of stuck right in the middle of this box. So basically back above 47.50. But you know what? Then we also have this level over here that you need to contend with, which is a pretty big level. Looks like every time it gets up to this level around 52, 53, more so around 53. So in Penn, as opposed to some of the other tech stocks we mentioned before, specifically Spotify, Snap, Twitter, Square, Block, SQ, Square, those stocks are still in the bearish catalyst that we're looking at right now. And Penn actually did not report amazing earnings. However, you start to hear stock buyback. That's something interesting, really, really interesting. So now we're going to see if we get higher pushes on good volume, get above that. Let me put that up on the screen again. Get above that 47.50 level, and then ultimately above 53. That would be the two areas that I'm looking at right now. All right, I have to head on out. I got to get ready for our other game plan meeting. Remember what we talked about. You might want to watch this video one more time because we spent a lot of time at the beginning of the video talking about the exact price action we're looking for. Facebook, we talked about 250 stop there. We looked at what we're looking at over the next 5 days. So we're not bottom fishing, and then take that same kind of price action that we saw in Netflix where we had that big push off the lows. Now we're looking for a light volume pause, and then we're looking for it to push higher. That would be the first sign smart money's coming in and holding the bid there. All right. I have to take off, everybody. Jobless claims coming out today. Have an awesome day. Be disciplined. Believe that you can do it. But remember, if this happens, then I plan to do this. Stick to that script. It is super simple as long as you know what to look for in the first place. All right. If you got some value out of this video, please do me a favor. Make sure you hit that subscribe, smash the like button so I know you like this kind of content. And have an awesome day, everybody. I'll speak to you soon.